Welcome out to Tackle Trading's The Art of the Reversal. This is Coach Matt. We're going to have a lot of fun tonight as we talk about and learn about the reversal patterns in the market. We're going to be talking about W's and head and shoulders formations and the 1-2-3 victory formation or inverted thereof. We're going to have a lot of fun here tonight. We're going to have a little bit of a laid back conversation as well. Just want to say what's up to all of Team Tackle. I was going to have my video up tonight, but Tanya told me I couldn't because he wasn't ready. At least that's what I will say, and he can't defend himself right now. For those of you who do not know me, my name is Matt Justice. I'm a coach at Tackle Trading, and I love talking about markets, and I think you're going to see that a little bit here today. But before we get to down into the conversation here today, let's talk about what we're going to learn, and then a quick message from Team Tackle, because we would love you to come join us as a pro member over at Tackle Trading if you are not already one. We're going to be focusing tonight on obviously reversals. What's up, everybody? I love to communicate with the team as I'm teaching, but obviously there's a little bit of a lag when we're live on YouTube, and so I'll try to stay on top of the messages there in the chat. But I got Coach Frank out there to help as well, so definitely say what's up. You're getting what's up from me. Obviously, we're going to be talking about reversals here tonight. We're going to be getting into the concept of trend momentum. Momentum lives in every single thing in the marketplace. Increasing momentum, decreasing momentum. But the momentum I'm talking about when it comes to reversal patterns is actually trend momentum. Having an understanding of if a trend is picking up steam or slowing back steam is a really important concept. And we're going to get into that. We're going to get into the three basic patterns that are in the market from an overall reversal, the traditional head and shoulders and W formations, the inverted thereof, as well as the 1-2-3 victory formations as well. And then I'm going to talk about pivots and the importance of pivots, of how they tell us who's controlling the price action. Because a lot of reversal patterns, guys, there's a lot of commonality between a reversal and a continuation pattern. In fact, the first few steps of a continuation and a reversal pattern are very, very similar. But as the reversals take hold, you start to see some telltale signs that give you the identity of who has the edge of the market. In the continuation, in the reversal, do the bulls have the edge? Do the bears have the edge? Well, the pivots are what's going to tell you who really has the control of the price action. Now, just a couple seconds for those of you who are finding Tackle Trading for the first time. First of all, welcome to Tackle Trading. We already love you. Tackle Trading is an educational platform. We love teaching other people how to trade, how to invest, and we do a lot of that through our webinars, obviously. But the heart of Tackle Trading is always going to be the pro membership, and you can join Tackle Trading for absolutely free, ladies and gentlemen. You can get a free 15-day trial, test out the newsletter, the traders report, hang out with us in the traders lounge every single day. Come join us in the coaches show. I'm doing 3 straight weeks on covered calls management. We had a great time last night, for about 75 minutes, just talking about how to manage the net liquidation value of a covered call. I loved it. I hope everybody else did as well. Test out the courses, test out the community, give it a trial, ladies and gentlemen. If you love it, stick with it. If you don't, no harm, no foul. We still love you, but that's the pro membership, and you can get that at Tackle Trading. Now, what are reversals? There are two basic, first and foremost, reversals are simply a change of direction. That's all they are. What was going up now comes down. What was going down now goes up. That's what a reversal is. A reversal can happen on any single time frame. They can happen on intraday charts for the day traders out there. They can happen on daily charts for the aggressive swing traders out there. They can happen on weekly and monthly charts for the position traders and investors out there. They can happen on any time frame. And the thing about technical analysis that I think a lot of people appreciate, and I'm certainly one of those, is that the things that you start to learn as, say, for example, a swing trader, are very similar techniques that day traders use, that investors use, that position traders use. And the reality is because technical analysis simply shows price action over time. And so if you're looking at an intraday chart, momentum works the exact same way on that time frame as it does on a daily chart, as it does on a weekly chart, as it does on a monthly chart. And so for reversals are simply the patterns that develop at the end of a trend. And so whether that trend's been going on a month, 3 months, 6 months, it is the patterns that we see that have a tendency to happen at the end of the trend. Now, before we get into kind of the nitty-gritty detail of the different patterns and the techniques that we like to look at as those patterns develop, let's first talk just very quickly about kind of where reversals occur in the first place. Reversals do not occur out of thin air. They often don't just occur simply because random events occur. The market is much more systematic than that. The market is much more efficient than that, even though Coach Mark will argue with me quite a bit on the efficiency of the market. But the market is quite efficient, ladies and gentlemen, and there's oftentimes zones on charts that are known as catalyst zones, and some are far more important than others. And so when you're looking at, honestly, the very, very, very beginning of reversal analysis doesn't start with slowing momentum. It really doesn't start with the double bottom. It doesn't start with the double top. Those are all down the road a little bit. What it really starts with is technical catalyst. And so, for example, you look at Dominion here, a utility company that has been in a bearish downtrend over the course of the last couple months. But now you're coming into a zone on the chart that we can all see called the 50-period moving average. It's on the weekly chart. You can see that over the course of the last 4 or 5 weeks, that Dominion is really kind of stopping that momentum. And so what really occurred was not some news item that came out that stopped the momentum. It wasn't the market that came out that stopped the momentum. The selling just stopped because it got over. Enough sellers sold. It came down into support. Buyers started supporting the price action. The momentum started shifting. And then all of a sudden, the bears don't have an edge anymore, and they're going to go move on to something else. The bulls are going to wait for a better development. But it doesn't happen randomly out of thin air. There are these zones on charts where you can expect certain development to occur. And so you take a stock like AMD, for example, who has been in a nightmarish downtrend, and a nightmarish downtrend in the face of SMH that has really done nothing. And so when you look at semiconductors are really holding pretty firm against some volatility out there, really just kind of hitting against that 200-day moving average. You look at technology itself, the sector, it's, a stone throw, a couple percentage points underneath the all-time high. But then you come over to AMD, and AMD is just getting trounced. Just in the last few months, it's went from $170 stock all the way down to $120 stock. And so this is still a bearish downtrend. So why am I bringing up AMD in a conversation on a reversal? Because it's at a zone where you expect buyers to start behaving a little bit differently, sellers to start behaving a little bit differently. And so reversal analysis really doesn't start once you find it on a chart and you're seeing the slowing momentum and you're seeing the double bottom and the double top and the breakout and the kiss of death or the kiss hello. All of that stuff we're going to talk about here in a second. It really starts with understanding where your stock is in relationship to where these very, very important areas of support and resistance are. You take Palo Alto Networks, for example, sitting on the 50-period moving average. Well, why would I expect some degree of reversal? I'm not saying it's going to reverse, by the way. I'm saying I expect a battle to occur here. And if that battle occurs, you could see the bulls obviously start to, come through a little bit. And so you're sitting at that 50-period moving average, the exact same zone that the last 2 times we looked at this environment, Well, the buyers stepped in. The buyers stepped in. Are the buyers going to step in this time? I don't know. But I'm going to be looking at Palo Alto over the next few weeks as it approaches earnings season to see if we can get that 1, 2, 3 pattern, or that head and shoulders pattern, or that W pattern. So before you even get into the actual concepts of a reversal pattern, you really just have to understand that these catalysts, especially longer duration moving averages, and I got to give Coach Mark a shout out here, because up until the hard 14 was released at Tackle Trading, moving averages were just another form of catalyst for us. Now, a few years later, they're kind of the end all be all of these major support bounces that we see. And as the market becomes more algorithm driven, we start to see the consistency of moving averages even more as well. So a massive shout out to Coach Mark, who really did bring that aggressively to Tackle Trading. You look at Amgen here. Why would we think maybe hypothetically you start to reverse? Well, a couple concepts here. Number one, you're at a massively important support level, principle of polarity. You also are at the 200 weekly moving average, and you're also starting to see it play out there as well. And so you see the same thing on CTAS, kind of hovering at that 50 weekly. You see the same thing on AME, trying to battle at that 50 weekly. You see the same thing on CAR, trying to battle at that 50 weekly. And so I just wanted to bring that up very quickly, because that's kind of what reversal analysis really kind of starts with. Now, when it comes to technical analysis in general, reversal analysis, continuation analysis, trend analysis is all based on pattern recognition. Every single aspect of it is based on pattern recognition. And patterns are simply historical patterns that play out over time, that once we identify, we have an understanding of what the most likely, most probable outcome is in the future. And so if we see a simple pattern that looks like triangle, circle, triangle, circle, triangle, the trader in me would obviously say the most likely scenario next is a circle. When you look at star, star, arrow, obviously the next most likely pattern, again, not a guarantee, but the most likely pattern is that of an arrow. That is simple technical analysis 101, pattern recognition 101. Simply identify the pattern and obviously look at the most likely scenario being a repeat of that pattern, because history or technical analysis is based on humans making decisions, which is based on behavioral analysis. All of it is based on history has a tendency to repeat itself. That's as simple as I can put it. But a reversal pattern changes that. And so when you're looking at recognizing those same patterns and you have a triangle, circle, triangle, circle, triangle, and all of a sudden you're saying, okay, I believe it's going to be a circle next, right? That's the next most likely outcome. But then all of a sudden it's a arrow. And you're like, whoa, threw a wrench in the analysis there. What's happening here? Something's changing is happening. You see a star, star, arrow, you get a circle and you're like, oh, something's happening. Something's changing out there. That's the reversal playing out. And so when you look at the life cycle of a trend, you can really understand the kind of the art and the systematic approach that we look at in reversals. When you're looking at the birth of a trend, it usually comes from a bearish downtrend that was occurring, that now came into a support zone, that now we start to see that those buyers step in. And so as the market is coming down at the far bottom left of the corner here, you see it hit support, come right back up. Then you start to see the pattern change, and you start to see support hold, and you start to see the market work all the way back into resistance. Because when you're looking at the development of a trend, remember, a downtrend is lower lows, lower highs, lower lows, lower highs. And so all of a sudden, if support holds, that pattern changes. If it works all the way back up into resistance, the pattern changes. We're starting to see that change over time. And so when you look at that developing W at the low point, you look at that and you say, okay, once it breaks out, we now have the beginning point of a bullish uptrend, which is now defined by a series of higher highs and higher lows, higher highs and higher lows. And so star, star, arrow, circle, triangle, circle, triangle, circle. That's what a trend is. And the trader and the investor and and the technician in me says, the most likely scenario is we go up again. And we're going to rinse and repeat that until it changes. And then once resistance holds, all of a sudden now our spidey senses is up and we're like, all right, that wasn't a higher level of resistance. That wasn't a higher high. That wasn't a star, star, arrow, star, star, arrow. That was a star, star, arrow, star, star, circle. Things are changing. I need to adapt with it. I have to change with it. And so you start to see that develop at the top end of a trend, and you start to see it work into a double top, double bottom. But once again, it's not a reversal yet. It's only a reversal once it confirms to the downside, because everything I said in the initial surge here is still bullish. It's still bullish up until the point where you violate support and now you have a bearish downtrend. And so when you're looking at the life cycle of a trend, a reversal is kind of what starts the trend, quite frankly. It's the birth point of a trend. And so a reversal both ends the previous trend and is the beginning point of the next trend. And it's where traders really love to be, because you typically have the longest duration of the trade when you can catch the trend at the beginning point of the trend. Now, when you're talking about those patterns that happen in the backdrop of a reversal pattern, not all of these occur in every reversal. They just don't. But there's commonality in every reversal and every continuation pattern. And that commonality is slowing momentum, pivots hold. Those happen in every single pattern out there. Once again, slowing momentum, pivots hold, pivots are tested, and then you see the pattern get violated. That's all the early steps that occur within the development of a reversal. And then what happens to confirm the trend is what we call the kiss. And I'll explain that here in just 1 second. And so when you look at the art of the reversal, it really starts with slowing momentum. Well, it starts with the catalyst, but once we start to identify the actual pattern development, it starts with slowing momentum. So let's understand slowing momentum from a trending perspective, because momentum occurs in every aspect of trading. Candlesticks represent momentum, patterns represent momentum. For example, a bullish engulfing candlestick pattern is a momentum-based candlestick pattern. A high base pattern is a momentum-based pattern. Momentum in trends can be looked at through the lens of how far it will run from when it breaks out of a resistance level. There's another step that I'll talk about here in a second that I do prefer. But when you're looking at momentum, once again, you look at it from, okay, how far does it establish that higher high? Because again, a trend is a series of patterns, higher high, higher low. And so if you're looking at increasing momentum conditions, which have a very good tendency or probability of continuing to move in that direction, you're looking at a scenario where from resistance to resistance, you have R1 to R2 move 2 points, and then from R2 to R3, you move 4 points. You can see it visually, but you also see it through the how far a stock will break out, or a commodity or a currency, whatever you're trading, how far that asset class will move once it does break out, because that's telling us who has the momentum, really. The buyers are carrying the day, more buyers are occurring, demand is offsetting any selling pressure, that momentum sets forth. And at that point, you're not looking reversal, you're looking at trading the momentum of the condition. You're looking at trading, swing trading, primarily swing trading, but you're just looking at trading that trend, basically. On the flip side, when you look at a loss of momentum condition, the buyers are starting to lose steam. They're slowing down over time. The news cycle is changing. The market itself is changing. Something is changing out there to create the buyers to lack demand. And so initially you see this big surge of $4, then you see a minor surge of $2. that again increases the spidey senses to the point where you're like, okay, do we have a pattern that is going to be changing here? Are we coming into some degree of catalyst? Let's get in. Let's put it on the radar for a potential reversal, a potential continuation pattern. Once again, the slowing momentum does not tell you at that moment if you have a reversal or a continuation. What it tells you is the previous trend is either picking up steam or losing steam. And if the trend is losing steam, there's a good chance that trend is going to be over here very, very soon, either through some degree of double top or some degree of violation of support, because the probability certainly does change in that slowing momentum environment for the bears to start picking it up just a little bit. And so when you are looking at that momentum, that's kind of what we're reading. Now, on the bear side of the equation, guys, you just flip that chart upside down. And my case studies today are really on bullish reversals here today. And the reason I'm doing a kind of the case studies on the bullish reversal side of the equation is I feel like we've already kind of had a little bit of a correction in a lot of areas of the market. And there's some developing reversal formations that are occurring right now. And so my case studies that we're going to be looking at are on the bullish reversal through the bullish reversal lens. And so let's take a look at some of these daily charts very quickly just from a momentum perspective, just to kind of understand what I'm talking about. So when you look at palladium here had a violent sell-off in late October to kind of mid-November. It retraced back up and then had a sell-off again. Now, from a trending perspective, you look at this situation, a stock going from about 113 down to 85, and then it goes from 95 down to 82. You see that slowing down a little bit. That puts it on the radar for a potential double bottom, which did occur a week later. And so you see that double bottom set forth right there. And then what occurs, it works back up into resistance, resets the buy zone to the 20-period moving average, and then you see the breakout there. But the story isn't told simply when you break out. Now, this is a daily reversal. It's going to have some weekly overhead, but it's a really good example of that slowing momentum working into that double bottom that works into that double top. You look at, for example, let's go ahead and look at Danaher here. You look at the momentum situation, big drop, smaller drop, smaller drop, smaller drop, and you start working. You see that momentum is working out over time. Now you look at this, lower low, lower high, lower low, lower high, lower low, barely, but a lower low, lower high. You see that pattern start to kind of contract over time. It starts to slow down. The sellers look at every time it breaks support, doesn't even see any momentum down. Anytime it breaks support, doesn't see any momentum down. You see that as a loss of momentum type condition that puts it on the radar for that potential reversal type situation. You can see it across the board on a lot of these examples here, where you look at that slowing momentum environment. And I say this all the time at Tackle, Coach Frank always says it as well. Slowing momentum on the bull side or the bear side is not an automatically pick up of momentum on the other. It's just that. It's slowing momentum. It only indicates that the momentum of the current condition is slowing down just a little bit. You look at OGN here, big drop, smaller drop, smaller drop. What does it put us on the radar? For a potential reversal that we track obviously over time. And so momentum is a very, very important part of the puzzle. The second thing that I feel is extremely important in reversal analysis is understanding what happens to pivots within the backdrop of a reversal. So let's say you're looking at a scenario where you have a downtrend. And that downtrend is supply is driving the market to the downside, but then all of a sudden you have this reversal start taking hold. And once again, in the backdrop of a reversal is a lot of commonality with continuation. Continuation patterns continue the previous trend. Reversal patterns obviously reverse the previous trend. Now, what can really give us a pretty good identification of who truly has the control is what occurs between the concepts of support and resistance within the pattern itself. And so let's say we're looking at a reversal continuation pattern, very similar to what I would say OGN is doing here. Up to resistance, down to support, up to resistance, down to support. I think you have another pretty good example. It would be, there's a couple good here. Let me see. No, Lockheed it wasn't those ones. That was a different one. WBA is a long-term one. Down here, oh, DHR. This is a pretty good one too. You see that kind of up, down, up, down. All right, so you see this kind of as a consolidation is what you really see this as. And so within the construct of this pattern, whether it's a continuation or a reversal, we really don't know until the end result known as a breakout. But within that construct of this pattern development, what happens at support or resistance is extremely important to really show you who has the edge. And so, for example, as long as we're just basing between support and resistance, we don't necessarily know if it's going to reverse or continue. But let's say hypothetically, in that development, you have this increase in support on the far right of the chart. Well, if all of a sudden you see this increase in support, the only thing that can occur to increase in support is for the buyers to step in before they were expected to. And oftentimes that's because something occurred in the market. Some news occurred, a positive news, a positive earnings story, a positive news story, an announcement of something, or simply just market mechanics turned into bullish. But whatever the case is, you see this increase in support. And that increase in support, that first increase really is a telltale sign. It's kind of like you're sitting at a poker table and you got all these great poker traders, poker players there, but you got that one guy that just gives you the tell all the time, just gives you the tell. And so you know exactly what's occurring. Well, an increase in support is kind of like a poker tell. It's telling us who truly has control of the price action. And so we get our spidey senses up because once that occurs, often what happens next is that breakout, which does confirm the actual pattern. And so the breakout is what confirms the actual pattern development, but that increase in support in the backdrop of a bullish reversal, or that decrease in resistance in the backdrop of a bearish reversal, is very, very telling in the greater construct of a reversal. Now, of the reversal patterns, you have three basic types of patterns. And if you're loving the webinar so far, guys, make sure to give it a like and let me know there in chat there. Let's see what you guys are thinking here. I'd like to know if you guys are enjoying it a little bit. Now, of the three patterns here, the third one being a little bit more unique post-pandemic here, but of the three patterns you have the double bottom, double top. That is otherwise known as an M formation or a W formation. The second one is a head and shoulders formation. That is, you have the bullish, the inverted head and shoulders. That's the bullish version of it. Or you have the traditional head and shoulders, which is a bearish. Obviously, these patterns happen on the bull side, happen on the bear side. And then you have the V shape, which I refer to as the 1, 2, 3. And I'll get into why I refer to it as the 1, 2, 3 here in a second. And so you have these three different types of patterns. Now, let's take a look at each one of these through the development of the specific pattern itself. And so when you're looking at a double bottom known as a W formation happens at the bottom end of a trend where we see the market hold support, work back up into resistance, and the culmination of the pattern is the breakout of the previous pivot point. That is a W formation. The M formation happens at the top end of a trend, and it starts our identification when we get the holding of resistance. Once resistance holds and we work back down into support and we violate support, that's where we see that ultimate bearish reversal take hold, is the moment in time where it actually violates support. And so when you're looking at the development of a W formation, which is kind of what we're seeing quite a bit in some of those cyclical areas of the market right now, is you look at the first through the lens of momentum. You see it through a loss of momentum condition. And then what do we see? We see a standard bearish retracement. Then what do we see? We see the holding of support. It works back up into resistance. Oftentimes you'll get this retest, increase in support, and then it's off to the races. And so when you're looking at that step by step, you look at the slowing momentum environment. Once we get that slowing momentum environment, it puts it on the radar for potential pattern development. But ultimately, it's when it holds support, works back up into resistance, is when you have the confirmation of the pattern. Now, when it resets that support level, that just tells us we're ready to giddy up and go. That gives us a lot of confidence that it's the buy side of the equation that is starting to control the price action, because an increase in support is that first indicator from a technical perspective that the buyers are in fact stepping in to support the price action. Now, one quick thought on the KISS. Remember all those steps, right? We have the slowing momentum, pivots hold, support holds, resistance holds. All of that occurs within the backdrop of a reversal. Two concepts of confirmation here. The first one is when it breaks out of resistance. And so you have the resistance pivot, and then it breaks out right there. That's that first confirmation that you now have a confirmed bullish reversal. The KISS hello, or its alternative, the KISS of death, is the first retracement after it broke out. This pattern confirms the trend. So the first confirmation when you break out, that confirms the pattern of the reversal. It's the most aggressive you can be in a reversal, is when you buy the breakout of a reversal. You cannot get more aggressive unless you're trading the actual pivot within a reversal. But a lot of people don't love trading that breakout of a reversal because it's not actually establishing and confirming the trend. What occurs next is the trend gets confirmed. And so you have this first wave in a trend that is really kind of that first most aggressive wave. But now you have, coming into that next pattern, more eyes on it. More people are now aware of what's going on. More people are talking about it in their inner circles, in their trading communities. They're sharing information. That information is getting out there very quickly. And so now you're talking about an environment where you have the development of a trend, and you're looking at picking it up within a trend that's already developed. And I just wanted to bring that up because the two tradable signals when you are looking at that potential reversal type situation is, one, when you get the confirmation of the breakout, and two, when you get the confirmation of the first pullback. That's the two trading signals when you're looking at an overall W formation. Now, the head and shoulders formation is a very similar one. In my estimation, the head and shoulders formation is a little bit more powerful of a pattern, has a little bit higher probability, in my estimation, of making the trend stick than the W formation. The reason being is, to have a head and shoulders formation, you actually have to have an increase in support within the construct of the pattern development. And so in a head and shoulders formation, you have a left shoulder, which establishes a lower low. You have the head, which is a slowing momentum move in the market, which establishes a lower low. That's still bearish. But then what occurs is something I talk about all the time at Tackle Trading. It's very, very important in trend development. And what I call it is the depth of the retracement. You're still bearish here. And so as it starts working back up and doesn't pivot back down and starts working all the way back to the previous pivot, that's showing you a lot of strength in the move here. And then when it retraces back down to the right shoulder, you have an increase in pivot point within that pattern. So you have the slowing momentum, you have the increase in support, and now you get the breakout. Why I really like a head and shoulders formation a little bit more than a W formation is not only do you get the slowing momentum, which obviously happens in a W as well, but you get that increase in support, number one. Number two, because you have one additional pivot point, you also have more time in the reversal. And I'm not going to get into detail tonight on the time part of reversal analysis, but the simple reality is the more time you spend in reversal, the better the reversal is, because longer duration moving averages have a tendency to get underneath the breakout channel, and you can get into what we call an open air environment. On the head and shoulders, that's the inverted head and shoulders. On the head and shoulders formation, obviously it's just flip it upside down. Now you're talking about it on the bearish side of the equation. You start with slowing momentum, which establishes that head. You have a deeper bullish retracement that comes all the way down to the previous pivot. That ends the previous trend, by the way, because you don't have an increase in support. And then you have this shallow retracement that comes in oftentimes to the 9 EMA, gets slapped down, and all of a sudden you break support. You have your confirmation of the head and shoulders formation. And so when you're looking at this from an overall development perspective, I like the head and shoulder formation because, once again, you have this concept where you can see it kind of develop in the real time over time. You first see that slowing momentum environment, standard retracement. Everything's fine. You just have this slowing momentum environment, still bearish, slowing momentum. Now what occurs is you have the even slower momentum. And so you see that breakout, it doesn't go very far. You break out, it loses steam very quickly, comes all the way back up into resistance, shows you that the buyers are having control, increasing that pivot, and then you break out and you're ready to rock and roll on that breakout. If you miss the breakout, don't chase. Wait, be patient, let it come back to you in the kiss hello. And then once that is confirmed, you are ready to giddy up and go on that. Now, when you're looking at the head and shoulders formation from a charting perspective, obviously when I'm drawing some lines, you can kind of see it and you can see the patterns, but I always do that because I want you to kind of memorize the pattern before you start getting into trying to read that on a chart, because it can be a little bit choppy sometimes when you are looking at it on a chart. Let's look at a couple stocks here very quickly. When you're looking at Lockheed Martin, for example, Lockheed Martin is still bearish. So why am I bringing it up? I'm bringing it up because you are already in the development of a head and shoulders formation. That's why I'm bringing it up. I'm bringing it up because it's easy to point to something that has already concluded and say, well, this is what you now should have done six months ago, right? Well, what are you going to do about it today? You got to learn how to read those patterns in the real time. So why do I feel this is a developing head and shoulders? Number one, do we have slowing momentum? The answer is an unmitigated yes. We have slowing momentum in trend. When you look at that slowing momentum, look at the big move to the downside, look at the shallow move to the downside. Those two patterns, they contract. You're seeing that as a slowing momentum condition. Step two, why do I say it's a head and shoulders in the short term? Once again, these are just daily reversal patterns because you worked up to the previous area of resistance. So what am I expecting? A shallow pullback and then a breakout. And so what you're looking at on Lockheed Martin here, let me kind of get a smaller line there, is you're looking at you're in the middle of a developing pattern. Now, does that guarantee this is going to reverse and everything's going to be fantastic? Of course it doesn't. We gotta wait, let the pattern play out. But it is showing us slowing momentum. And it is showing us a deeper bearish retracement. And it is working itself all the way back up into the previous resistance level. And so we're starting to see early signs of it. And because of the slowing momentum and the working all the way back up into resistance, we have this currently as a head and shoulders formation, certainly could work into a W formation as well. When you're looking at a couple other examples out there outside of Lockheed Martin, I'm actually seeing some of the aerospace and defense companies show very similar patterns. Northrop, the knock list, for example, slowing momentum environment, deeper bearish retracement, working all the way back up, starting to see those early signs of pattern development on the knock list. You look at applied materials, one of my favorite stocks. It's also starting to show some pretty decent reversal patterns here. What do we have? Look at the left shoulder. Look at the head. And again, it's a little more choppy when you're looking at it on a live chart, but when you see that increase in support right there, look at that. We got a nice little head and shoulders formation developing there. And then when you're looking at a couple violations of the neckline, that is one of them, which would put that on the pretty good little situation. You could also draw that trend line right there as well and say anything above 180 would be confirmation on that head and shoulders formation on applied materials as well. And so when you're looking at it just from an overall, when I'm drawing it on the board here, that's one thing. When you pull it up on the chart, you start to see it in the real time, and it takes a little bit of time to develop, but starting to see a couple good things out of applied materials. By the way, semiconductors are starting to turn a little bit. That's positive news in my estimation. Now let's talk about the third type of reversal, and that is the one that became popular as a pattern post-pandemic, and really not I don't think the pandemic really had anything to do with it. It just kind of kickstarted it. But I feel like the importance of algorithms in the market is what really made the 1, 2, 3 popular. Now, the reason I call the V shape, so you have the W formation, you got the head and shoulders formation, and you have the victory formation on the bottom side. The reason it's called the V shape is because it looks like a V shape when you put it on a chart. It goes down with momentum, it goes up with momentum. But when you actually look at it on a daily chart, you see some early signs of how I label a trend in general, the 1, 2, 3. And so when you're looking at the 1, 2, 3 pattern here, the V shape, the best way I can describe the V shape is it's the head and shoulders formation without the previous loss of momentum. That is by far the best way I can describe a V-shaped formation. And so, for example, when you're looking at a head and shoulders formation, the head and shoulders formation looks like this. You have a loss of momentum. You work all the way back up into resistance, increase your pivot point, and you finally break out. That's the head and shoulders formation. What the V looks like is it comes all the way down, establishes that same degree of pivot point. That's a terrible line. I apologize for that line. That same degree of pivot point. But what occurs here is interesting. It starts working up slowly, comes into resistance, never pivots, breaks out of those shorter duration moving averages, and comes all the way back into what we describe as the deep bearish retracement. And then what occurs is either a high base developing pattern where you basically flatline for 3, 4, 5 trading sessions, followed by a breakout, or 2, you do a shallow pullback followed by a victory formation. But it's really a very similar situation to if you never had this slowing momentum. And so if you never had this slowing momentum and all of a sudden you just deeper retraced and then increased your pivot point, that's the hallmark of the V-shaped formation. And again, the 1, 2, 3 name of it is because in a trend, you have 3 patterns. In a trend, the first pattern in a trend is the breakout. When you break out of resistance, that's pattern number 1. When you increase in support, that's pattern number 2. When you get overextended, that's pattern number 3. That's pattern number 3. And so I call it the 1, 2, 3 formation, but really it's just the patterns that develop within every single bullish uptrend. And so when we look at those, and it really starts with the depth of that bearish retracement. The deeper that retracement goes, the better it's going to look from an overall victory formation. And so you don't have to go too far in the market today to find some victory formations, quite frankly. When you're looking at a couple in the energy area of the market, for example, you got Oxy here. You look at Oxy, let's go back in time just a little bit. Oxy, bearish downtrend, lots of momentum. What occurs? Works its way up. It's a bearish retracement there. Do you see how it's slowing down? But it never confirms down. Breaks through the 20, breaks through the 50, and now you're working all the way back up into that 52 level, which is the previous old resistance zone, which means you no longer have a bearish downtrend. It was bearish all the way here. It was bearish here. It was bearish even at the 50 period moving average. But once it broke above the 50 period, all of a sudden, you're at the previous pivot of resistance. That is no longer a bearish downtrend. You're looking at a bullish uptrend, slightly overextended, I would say, but that's what a V shape does look like. Once again, energy has been doing it nonstop, but I think the energy call out here is a really good one. We talked about it in the Traders Lounge quite a bit. And so for the pro members, if you're not a pro, come hang out with us in the Traders Lounge. If you are a pro, come hang out with us in the Traders Lounge. We have awesome conversations every single day. The market is open, but you see the energy here, down, 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 down. Okay, we're in a bearish downtrend. We're not touching it. We're a little bit nervous. Starts working up to the 9 EMA, breaks through the 9 EMA, breaks through the 20 SMA, deeper bearish retracement. What does it do? 4 days of consolidation, 9 EMA catches up, breaks out, momentum sets forth, and you have a good momentum condition. And so even in these V-shape, the constructs of V-shape formations, which can be really difficult and challenging for new traders, it still gives you the identification of these patterns that we see in every single reversal, quite frankly. Now, with that said, ladies and gentlemen, I just wanted to spend some time tonight teaching reversals, really kind of geeking out on reversal analysis, put it on the radar for our community, go through some case studies, identifying these potential reversals, because once again, do I think the market is in a reversal situation from, for example, RSP? I do. I do. I think we've already corrected. I think we've found a bottom, and I think this is a matter of timing through earnings season and all of that. And yes, I do think earnings season is going to be volatile, but the reality is I just wanted to put these concepts on the radar of our community because, and I've done this webinar a few different times. Usually I do this webinar when there are reversal analysis at play. We have bearish reversals in the market happening right now. We have bullish reversals happening in the market right now. And regardless of whether or not you're looking at an opportunity in the market today or down the road, I wanted everybody to have an understanding and a detailed understanding of specifically what those patterns look like. How do we go through the development of the pattern? And I wanted to have a little bit of fun doing it. And with that said, guys, I just wanted to say thank you so much for hanging out with me tonight on our YouTube channel. Obviously, the Art of the Reversal is presented by Tackle Trading. And if you are looking for an amazing trading community that will put the education in application in every single capacity, come over to Tackle Trading, check it out, sign up for a free trial. And I'll just tell you this, ladies and gentlemen, at Tackle Trading on a weekly basis, we put out more content and we have more conversations with our community and the traders and the students in our community than other educational firms do over a yearly basis. We love our community. We hang out in our community every single day. We talk with traders every single day, and we put the education and the application all the time. And if that suits your fancy, come join us at Tackle Trading. You can sign up for a free trial at any time. And guess what? Also with that free trial, we got a master trader class coming up at the end of January here in about 10 days from now. And next week, I almost forgot. Next week, next Wednesday, specifically 8:30 p.m. Eastern Standard Time, I am going to be teaching the latest edition of the AI Gold Rush. I've done that a few different times. I'm willing to bet you wish you would have hung out in that first one about 18 months ago. Come check it out. AI Gold Rush next Wednesday, 8:30 p.m. Registration only. You guys are the best. Hit that like and share on the way out the door. Love you guys. Hopefully you have a wonderful, wonderful rest of your night. And looking forward to hanging out with you guys in the tackle trading community.